East Capital thinks that the sentiment towards emerging markets is about to change. Why is that?
Well, we think that the adjustment that has happened in emerging markets over several years is completed or almost completed. Currencies have adjusted, current account deficits have been lowered, and also there's been deleveraging, especially in Eastern Europe. So when the Fed, the American Central Bank, will raise interest rates, probably in December, we think that may be a turning point. That's historically what has happened. That leads to emerging market equities outperforming. We think that will be the case this year as well, because there has been a lot of adjustment already. So financial markets price in the move ahead of time, and we've seen that, I think, again this time around, and it started several years ago.
Which markets do you think look the best?
Well, it's actually those that have adjusted the most, where we've seen the currency adjusted already, where we've seen valuations in the stock market adjusting to a lower level, we think, and also the ones that are less exposed to international capital flows and has a lot of debt. And here we like Russia. We also like Romania in Eastern Europe. We think Indonesia is about to turn around. We like what's going on in India, where growth is accelerating. There's a very ambitious reform agenda. So these are triggers that will help to also make the stock markets perform. And the opposite is true for markets that have not yet adjusted, where currencies maybe need another leg of downward revisions, where there are lots of debt hanging over the market. So there is, even though we think there's going to be a general acceleration, a general improved sentiment, there are still pockets of vulnerability across the emerging world.
What's the reasons for the change in Russia, do you believe?
It's primarily related to, the trigger is inflation. Inflation is currently 15%. We think it will be 5% in 12 months' time. That's a very dramatic drop in inflation, and that will be associated with a lot of interest rate cuts, and that will support not only the bond market but also the equity market.